Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines this afternoon. The 10-year government bond yield falls the most since 2013 after the government cuts back on its borrowing plan for the first half of the new fiscal.
PSU banks cheer the government's new borrowing plan. The Sensex and the Nifty, however, trade in a narrow range.
Bandhan Bank listed a premium. The stock rallies as much as 33% on day one.
ArcelorMittal and New Metal Mauritius disagree on whether fresh bids should be called for Essar Steel.
Binani Industries seeks 10 days to pay off all Binani cement creditors. The Kolkata NCLT gives creditors 2 days to consider the proposal.
And Fortis Healthcare confirms that it has received an offer from Manipal Health for a possible deal, says it is still evaluating the offer.
Lots of voices coming up on the show as well. We'll get Manish Vadhavan of HSBC India in to talk about the bond markets. Saurav Mukherjee talks about liquidity being the biggest concern for the markets in the new financial year. And we'll do a check on the commodity market, especially oil, with Vandana Hari of Vanda Insights.
But before we get to that, quick check on how the equity markets are faring. The cheer on equity screens really is triggered off from what we heard from the government yesterday and how the bond markets reacted. Neeraj is here with a closer look.
Yeah, and the global market's doing so well as well. So all of that combined, Harsha, you summed it up. And by the way, volatility has come off quite rapidly the last 3 days. So there has almost been a 10 to 11% dip in India VIX. Look at the last 3 days. This is, of course, today's session, but the last 3 days, if you do the GIP3, you will see how quickly the volatility has come off of the last 3 sessions. So it's a good move down, and which is auguring well for the markets. But specific components, you could almost argue it's a mirror image of yesterday. So banks leading the charge. SBI, Axis, Kotak Mahindra Bank, the large cap names and the broad end of spectrum to select mid cap banking names too have not done too badly. NBFCs, you naturally believe, are the principal beneficiaries of sentiment, if not actual borrowing costs coming off because of the bond yields. Bajaj Finance, PNB Housing, Cholamandalam, some of them have specific news pegs as well, but across the board, NBFCs are seeing a good move. And stocks like Cholamandalam as well as Jubilant Foodwork continues to rise and shine. Record highs for Jubilant Foodworks, particularly among the consumption names. These stocks continue to rise and shine. So good going here. Just a couple of stocks that I wanted to mark. One of them is Fortis Healthcare after this announcement that they made. But Dalmia Bharat too. Not that it's conclusive. Fortis had that peak and a trough. But Dalmia Bharat went up in and around the time when this NCLT news came out as well. Nothing conclusive. I'm sure that this will go on to the higher courts. But today, that stock seems to be doing okay, 2890 or 2900 or thereabouts, 2% higher. In the session, it's solo cores, and some of the other cement companies are doing an encore.
Okay, that's the markets. But the interesting take on this is, after the heavy selling in February, foreign investors are returning to Indian equities. Global funds have ploughed in about $2 billion into domestic shares after pulling out nearly $2 billion, 1.96 to be precise, last month. This is the highest overseas inflows among Asian markets, according to data compiled by Bloomberg. The decline in valuations from a decade high and improving outlook for earnings seems to have drawn foreigners back, at least for now. Ira.
All right, we led with a conversation on the equity markets out of habit. I'd like to, though, say that the stealing of the show today is from the bond markets. We've got the 10-year benchmark bond yield down extremely sharply, more than 25 basis points. You closed about 762 yesterday. You're down at 734. You can thank the government for that, for listening to the message that the bond markets have been sending out for months now. Just a brief reminder of what the government has done, and then we'll get in Manish Vadhavan of HSBC India to talk about it. So a couple of things. One, of course, the first half borrowing will be 2.88 lakh crore. That's substantially lower than what it was last year. Even in terms of proportion, 48% of the budgeted amount will be done in the first half. Typically, the government does more than 60%. But also, if you look at the aggregate gross borrowing for the year, the fact that the government is saying that they'll borrow additional 25,000 crore from the small savings pool and that they will reduce the buyback by 25,000 crore, put together, most market participants seem to be assuming that the gross borrowing number for the full year will be about 50,000 crore lower. Apart from that, of course, they've changed the buckets in which they're borrowing, in particular, increasing the borrowing in lower tenor buckets, particularly 1 to 4 years, where about 8.3% of the borrowing will be centered. Manish Vadhavan is Managing Director and Head of Interest Rates at HSBC India. He's joining us on the show. Manish, very good afternoon to you. Thanks for taking the time. I've come back from holiday and the market mood has changed. The government has done quite the trick yesterday. What did you make of their announcements?
Hira, welcome back from your holiday. Great. You must have heard the news. Markets have rallied quite a lot. I think I would say it's a perfect gift from the government to the banking system in terms of bond markets. Last quarter, there were huge losses in AFS and, everybody was struggling. They've heeded to what the market has been saying or in the consultations which were going on with the RBI and the government. They have agreed upon nearly to all the proposals, I would say, and this has definitely helped the sentiment in the bond market quite a lot by reducing the duration supply and even reducing the borrowing program. If you look at it, when the nominal GDP is growing around 15% or just around 12-13% also, and the banking system is expected to grow, the financial system nominally by 15 to 20%, you are reducing your borrowing program in the first half by nearly 30 to 35%. So I think that is getting manifested in the yields today, which you saw. I think benchmark 10-year is down around 25 to 27 basis point lower, and the longer bonds are even lower, means something like 30 basis points.
So Manish, do you anticipate the state-run banks to now cut their treasury losses and re-enter the market?
The first thing would be if the yields close around these levels, then the supposed losses which we were fearing for this quarter would be far, far lower. It could be just around a very negligible amount. That's a very good sign because last quarter was really tough for everybody. I think the next quarter, when it begins the borrowing program, though it is smaller, the key would be what kind of stance Reserve Bank of India takes in the policy on 5th. And after that, I think it would be also dependent on the deposit creation, how it pans out, and liquidity. But I still, believe that the overall sentiment would be far more positive than what it has been in this quarter because of the now the supply, which has been managed quite well. Liquidity seems quite okay, and I am quite hopeful that the disruptions which were caused in the last financial year because of the GST and the demonetization part, because primarily the remonetization has happened in the last financial year. All those things are history and they're behind us. We would be back to the normal trajectory of deposit growth of around 12 to 13% and maybe a credit growth of 8 to 9%, which should pave a way of the public sector banks coming back to the markets.
Manish, couple of specific questions. So if you look at the breakup of the borrowing, so they're doing less than 50%, at least of the budgeted amount, if you go with that 6 lakh crore number in the first half. The reason you front load is because second half is busy credit season, so you typically don't want to, disrupt that. That dynamic doesn't change. Does one need to keep a close watch on this, then the second half? Because second half, again, the RBI may potentially be in a slightly more hawkish mode than they are now.
You're absolutely bang on that. I would say that at this moment, for the next quarter, we can take a call that this is what RBI has done. This is a very, very bold step from the government also in terms of not coming with a larger borrowing program. The usual numbers are around 60 to 65% in the first half, which is going to be a bit lower. So it's a big, I would say, a big bold step. Yes, you are absolutely right that if things go out of hand in terms of inflation or for that matter, the liquidity part or Reserve Bank of India changes stance, or we see some kind of international markets developments on the reverse side in terms of bond markets, you could see a reaction. But I think it's 6 months away. It's still a long time. But for the next quarter, if we look at it with inflation, that fear of inflation which had gripped the markets for the last 2-3 months, and the last two numbers, if they go by, and the projections are that they would hover between 4.5 to 5 or maybe 5 quarter worst case scenario. If things are falling back in place, then it should be okay for the next quarter. I really, it'll be difficult to hazard a guess what would happen. Yes, it looks like when they come in the second half and they announce the 55% balanced borrowing program of central government and additionally the state government borrowing program is also backloaded, you might see some pressure on bond yields at that point of time.
Fair enough. Manish, a question also on this tenure issue. There was an assumption that the government would try and push off or stave off redemption risk when they were doing these bond switches, etc. Now, if they're borrowing more in the lower end, isn't that a problem, or is sort of the bunching up of supply on the 10-year a bigger issue, and hence they're trying to push it across the curve?
Yeah, there is definitely a refinance risk, and because of that, we have been seeing a lot of duration supply, and they were not willing to issue in the shorter end segment. But I think the markets had reached a point wherein the pressure was so much on the banking system, and the absorption of the long end papers was becoming more and more difficult. In that context, I think they have agreed to this. Also, if you note, they have they have budgeted, instead of 75,000 crores from the small savings, they have budgeted something like 1 lakh crore now, because they presume, or they feel that they would be able to collect more through small savings, and the state governments are not borrowing through the NSSF route. So they have taken all the steps, the central government, to assuage the markets in terms of fear of supply, fear of duration. Yes, it is a minor risk what you're saying, that why are they borrowing for next 3-4 years where the maturities are very high. But I think these were extraneous circumstances. They have heeded to it now. And as the markets normalize, you might see normalcy in the borrowing program also. And if you look at it, out of 288,000, they have also mentioned that 10% would be in form of inflation index bonds and FRBs. So the net supply in the duration is quite low. And also, between the 1 to 4 year segment, the amounts are not very, very large. They're only talking of something like 8% of the total borrowing, which is a very minuscule amount.
Manish, the Economic Affairs Secretary also...
It should not have any material impact, I say.
Sorry, I was saying the Economic Affairs Secretary also went on record to say that they are in talks to sort of increase the foreign investment limit in rupee debt. Is that likely to happen? And what do you think will be the ramifications if that were likely?
This is one of the policy decisions which has been pending with the government and RBI. I feel that it would not be a decision which would be, just taking into consideration the immediate factors. This is a long-term decision which is taken by the government and RBI, wherein the important factor, the main factor for consideration is how much foreign exchange liabilities do we want to create. I personally feel that once this thought process is done, they would come out with a plan to increase the overall government debt quota, which is at the moment limited to 5% of the total outstanding debt, to 7.5%, and gradually it will be opened up every quarter the way it has been done now. I don't see a reason of that not happening, because the discussions which we have had with the ministry and the RBI also, clearly, the benchmarking is with the other emerging market nations, wherein the outstanding debt is hovering between 25 to 30%, whether it is Malaysia, Indonesia, or Korea, where we benchmark ourselves. So I strongly believe that this is a step which will happen. And as of now, I think the macroeconomic parameters are reasonably strong, that the government should be able to take this kind of a step. But it would not be that even if they increase it to 7.5%, I don't expect it to be at 10%, to which some market participants believe it will happen. It will be 7.5% initially, but the limit would be available on a quarterly basis, as has been now, in smaller amounts.
Which would make absolute sense because that's the way they have gone so far. Manish, thank you so much. Appreciate you taking the time to explain the change in the bond market mood based on the announcements yesterday. That's Manish Vadhavan of HSBC India. Just one more word on liquidity, although this time coming in more in the context of the broader markets, whether it's equity or otherwise. Liquidity could be one of the big worries this year. That's in the new financial year. That's according to Saurabh Mukherjee of Ambit Capital. In a conversation with Bloomberg Quint earlier today, he said that the government has done a good thing to cut down the bond auctions in the first half of the current financial year, but added that there are still concerns, in particular GST collections, which still need to stabilize. Listen into a bit of that conversation.
If you ask me, the only big worry this year is liquidity. Liquidity does seem to have tightened considerably in India in the last 3-4 months. Hence the tightening in bond markets, hence the pressure on stock prices. Banks are having to struggle to get deposits. They're hiking their deposit rates. And I think in that context, the government's announcement to reduce borrowing in H1 was a very smart announcement, because that gives relief, that gives the market relief on the liquidity front. If we get a couple more announcements either from the RBI or the government which give relief on liquidity, I think the market will find itself on a firmer footing over the next few months.
Saurabh, morning. Ira jumping into the conversation. Actually, I was just looking through your report and that chart where you talk about GDP and liquidity being the two drivers. So if you juxtapose that with what we are going to see, perhaps at least in the early part of FY19, GDP will improve. Liquidity, is tighter than it was last year. But I don't know that the Reserve Bank is in a mood to tighten liquidity to the extent that it would start damaging the economy. Because if you look at the last MPC minutes, they seem to think this is a nascent recovery. They seem to feel the need to support it. So could we have for the want of a better term, a Goldilocks scenario where GDP is improving, liquidity is comfortable, although not super easy, and inflation stays, moderate?
I think that's certainly feasible, Ira, that the RBI doesn't dry up liquidity. I don't think the RBI has any reason to worry about the rupee at 65, 66. I think even my reading is both Bombay and New Delhi would like to see the rupee at 67, 68. So it's not as if the RBI will lose that much sleep on the currency front. And whilst the CAD is approaching 2%, and with FII outflows in the bond markets, a little bit of a concern on balance of payments, it's not that big. So it's not evident that we are set for a big draining in liquidity, a big liquidity challenge. It's not evident to me there's a major liquidity challenge coming up. The only black cloud I see in the horizon is GST collections. If GST collections don't improve materially from this 85, 90,000 crore mark, if we don't push through the 100,000 crore per month mark over the next 3, 4, 5 months, I think then we have a bit of a challenge, because I think then the bond market, the 10-year bond yield could pick up, could harden further, which will lead to FII money leaving the bond market, and overall tighten up liquidity in our country. But barring a shortfall in tax collection in H1 precipitated by weak GST, and it's a big concern I have, barring that, I don't see an adverse liquidity circumstance, and hence combining the GDP uptick with decent liquidity, we should have a reasonable conditions for trading in the Indian market.
Okay, that was Saurabh Mukherjee of Ambit. Let's move on now. It's been a busy day at NCLT. 3 different insolvency cases coming up at 3 different tribunals. Let's start off with what's happening at the Kolkata NCLT, which is hearing the Binani cement insolvency case. Joining us on the phone line is Queen's Ishadrita Lahiri, who is in the courtroom today. Ishadrita, thanks so much for joining us. What did the judge say?
The Binani Industry Limited, they have sought 2 weeks in order to pay off all their financial and operational creditors. The judge has said that BIL's application for paying off all debts cannot be taken up in the NCLT, and that BIL needs to submit the application to the Supreme Court first. Now, the judge had asked the RP if they can consider giving Binani 2 weeks to pay off all its debts. The judge also suggested that the COC and the RP try and have an out-of-court settlement. Binani, as I said, have asked for 2 days in order to pay back all their debt.
Has there been a decision taken? What was the judge's final decision?
Well, the court has been adjourned till the 2nd of April. Hello?
Okay, we'll leave it there. Thank you so much, Ishadrita Lahiri, reporting from the NCLT in Kolkata. Sajid also joins us in this conversation. It looks like Binani Industries will have to approach Supreme Court, isn't it, for the next logical step in this case?
It looks like, but if you go about what the interim order of the judge is to come back to him in 2 days and decide whether they want to take it out of the IBC or not. Now that is going to put in a good precedent for other cases to come in, because you already have Jayprakash, which is been talked about in the market, that whether it will go outside the IBC. Essar could be another case where it could again be a case which can go outside the ABC. Now this is the COC has to take a final call. As of now, the RP and the COC have sided with the bids coming in from Dalmia, and Dalmia has paid the 10% of the amount for the entire bid which they had put out for the Binani Cements. Now the case of Dalmia is not been heard yet. They have protested, they've agitated in front of the court. The court has said their case will be taken as a second, but first they will deal with the RP and the Binani case, which is seeking termination. To give a background, Binani did get into an agreement with Ultratech to sell 98.7% stake in Binani Cements, and that's the genesis of why Binani wants to terminate the entire NCLT proceedings. So that's something which we will play out in the Kolkata High Court, and of course all these cases, even if the NCLT agrees to it, Dalmia will go to Supreme Court challenging it because it's a winner in this NCLT proceedings.
Yeah.
So basically, Sajid, what the judge has said, and he said this is not an order, is that you go back, I'm giving you 2 days, see if you want to settle this outside of court.
Exactly.
And if you don't, then the only way to sort of circumvent this is to go to the Supreme Court and ask them to push off the insolvency proceedings.
So it's, judge is also playing safe.
Exactly.
On one hand, he said that once the proceeding has started, it can only be stopped by the Supreme Court. So you have to go to the Supreme Court. But at the same time, he wants to make sure that he gave an opportunity to all the parties to consider an out of court stuff. Because ultimately, this resolution is something where all parties have to agree to it before it goes ahead. So yeah, it's a case of who will blink first, and I think COC will have to come out and give their stand why they favor Dalmia's bid over Ultratech bid, and Binanis will have to approach the Supreme Court seeking termination of the entire proceedings.
All right, so this one is far from being done. Thanks so much, Ajit, for putting that in perspective. On to the Ahmedabad Tribunal, which was hearing the Essar insolvency plea. The court has asked all parties to submit their responses by the 2nd of April, which also incidentally happens to be the last date for all bidders to submit their bids. Let's go across to Rahul Nair of Quint, who was in the court. Let's get Rahul to give us more details. Rahul, can you help us understand what transpired in the courtrooms?
Yeah, well, there was a lot of heavy arguments happening between the counsels of both New Metal, the RP and Arcelor. New Metal was represented by Mukul Rohatgi and Arcelor was represented by Abhishek Manu Singhvi. And the biggest point that New Metal raised was they did not want to rebid per se, because what they claim is that if their disqualification is null and void, then there is no requirement for a rebidding process to begin on 2nd of April. On the other hand, ArcelorMittal claims that although they have filed a petition against the RP's disqualification of their bids, they do not mind putting in a fresh bidding. So there was a lot of to and fro happening between the 3 different councils. Eventually, the court has decided that on 2nd of April, all the petitions will be filed and all the rebidding will be done again. And on 4th, the hearing will transpire on the case. So this is what had happened today in the Ahmedabad NCLT.
Okay, Rahul, we'll leave it there. Thank you so much for joining us. Rahul Nair, reporting from the NCLT as well. We'll just slip into a short break. On the other side, we're going to be discussing where oil prices are headed. Vandana Hari from Bombay Insights will join us on the other side.
कुछ इसी तरह बच्चों के साथ साथ बढ़ते हैं LIC के चिल्ड्रंस प्लान्स, जो दे आकर्षक भुगतान बच्चों की हर बढ़ती अवस्था में। बढ़ो 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 मेरे संग।
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार, just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. the SME growth platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Welcome back. You're watching Power Lunch. Let's dip into the headlines. The 10-year government bond yield falls sharply after the government reduces its borrowing program for the first half of the new fiscal.
PSU banks cheer the government's new borrowing plan. The Sensex and the Nifty trade in a narrow range.
Bandhan Bank lists at a premium. The stock rallies more than 30% on day one.
The Election Commission announces voting for the Assembly election in Karnataka. They will be held on the 12th of May. Results will be out on the 15th of May.
All right, let's look at the markets once again. About a 0.25% higher on the Sensex. Agam is with us with all the movers. Agam.
Good afternoon, Ira. Well, the benchmark indices are largely consolidating, though, given the fact that we've seen some gains, and of course, the advance decline ratio is towards the advances. With the cash owners at largely average levels, we have seen on an expected basis, a substantial pickup in the futures and options turnovers, standing at a little over 7.4 lakh crores. Now, in the broader markets, of course, have outperformed, given the fact that we've seen both the small cap as well as the mid cap indices advance by as much as 1%. So that's almost 3 times as much as the benchmark indices. And in terms of sectoral indices on the National Stock Exchange, all of them are trading in the green. We have good gains coming in PSU stocks as well as metal stocks, which have seen a little bit of rebound after the volatility that we've seen in those counters over the previous few sessions. That said, in terms of the Nifty gainers, we have gains coming in, oil and gas companies like Indian Oil Corp as well as HPCL. On the losing end, there is some amount of weakness in Bharti Airtel as well as Infratel. But on the whole, it's turning out to be a good day of trade, certainly for the broader markets.
Agam, thank you for that. Let's talk about oil now. Commodity markets, WTI climbed over above $65 a barrel as easing fears of global trade were offset concerns over rising stockpiles. Oil now trades near the highest level of the year. Let's discuss the outlook for oil prices. Vandana Hari, founder of Vanda Insights, joins us from Singapore. Vandana, thank you so much for joining us on Bloomberg Quint. What's your assessment of what's going on in the oil market? Have these global trade fears really subsided? Is the momentum back on oil prices?
Good afternoon. Thanks for having me on your show. See, what we need to understand with regard to what's going on with the headline oil prices is that the oil market fundamentals have improved. So when I say that, if you compare it to 2017 and certainly with 2016, a lot of the excess inventories have drained. So when we started out in 2017, between the start and the end of 2017, thanks to the OPEC, non-OPEC cuts, more than 200 million barrels of oil was drained from the commercial inventories in the OECD countries. And now they're sitting just at an excess of about 50 million barrels. I mean, compare that with more than 260 million barrels at the start of last year. So and demand growth was pretty strong in 2017 and is expected to continue being strong in 2018. So in terms of fundamentals, the market is balancing. The OPEC, non-OPEC cuts have removed excess supplies and demand is quite healthy. So that is basically the bottom line, which puts a floor under the prices. The latest run up in prices that we have seen in the past I would say a week to 10 days, is mostly because of geopolitical fears. And within that, I think it's the Iran deal, or rather the vulnerability of the Iran deal with an increasingly hawkish Trump administration in the US, threatening that it will walk away from that 2015 multilateral agreement which removed all the sanctions against Iran, and a possible snapback, a return of US financial sanctions against Iran. That's driving a lot of fear and a fear premium in crude right now.
Vandana, specifically on Brent, that's something that we track here. It's trading about 70. Are there any near-term price targets that you're watching out for?
Look, 70 has again reached, Brent did climb above 70 to 3-year highs in January. But after that, what happened was the entire financial markets turmoil, if you recall, starting from February, which basically weighed crude down. And now again, it's back up above 70 today, Brent. Because of the fears. Now, going forward, at least until the May 12th, which is the deadline for Trump to decide one way or another, and increasingly the market is thinking that he may not extend the waiver of sanctions. So until May 12th, really, I think this fear is going to remain in the markets. We could, around May 12th or after that, depending on how bad the situation becomes with regard to the Iran deal, we could see an upward movement. So I'm looking at more Brent closer to 70 rather than 60 for the next several weeks.
A couple of weeks ago, we were talking about how shale production is pretty much getting momentum, and therefore, the powers are clearly shifting towards the US as well. Is that being reflected in the stockpile data? What's your view on where supply stands now?
I think the jury is still out. I know there have been a lot of very optimistic projections on US shale growth. Definitely, if you compare that to what happened in 2017, which was a growth of about 400,000 barrels per day year on year. 2018, the projections of whether you look at the US EIA or OPEC or IEA, pretty much everybody's singing from the same hymn sheet, and everybody is quite bullish on the shale growth, putting it anywhere between 1.3 to 1.4 million barrels per day. To my mind, I think that is a bit overly optimistic. At Vanda Insights, we've been looking very closely, especially at the results season that is just behind us for the fourth quarter, and we were really parsing through all the information that the shale companies, producers have released. And my analysis personally is that there's definitely going to be growth. It might definitely be better than 2017, but it's not going to be as phenomenal as 1.3 or 1.4 million barrels per day year on year.
Vandana, we leave it there. Many thanks indeed for joining us with your views. As Vandana Hari from Vanda Insights talking about where oil is headed.
All right, let's bring the conversation back home. Bank of America Merrill Lynch sees continued underperformance in India, but expects the rural space to perform better. Jayesh Khilnani is here with the details of the report that BOAML put out. Jayesh.
Ira, that's the broader theme that BOFAML, Bank of America Merrill Lynch has actually put out in their strategy note. They have started the note by comparing the MSCI India Index with the MSCI Emerging Market Index. The chart on the screen will show you that the MSCI India has highly underperformed the MSCI Emerging Market Index. MSCI India this year has given you negative return to the tune of about 5%, while MSCI Emerging Market Index has given you positive return of about 2 to 3%. Now, the few reasons that they have cited for this underperformance is the higher bond prices in India, as well as higher bond yields rather in India, and higher crude oil prices as well. Also, the PSU banks have actually contributed to this underperformance, along with the introduction of long-term capital gains tax in the recent budget. They have also, you mentioned, something about the bipolls, in which the result is actually showing that BJP will have a tough ask going into 2019. Now, as far as their market view is concerned in the strategy note, they believe that higher valuations and high earnings expectation that will likely put pressure on the general market for the next few months. And based on all of these factors, they have a Sensex year-end target at about 32,000, which is currently lower from where we are trading at current levels. As far as some of the sectors and stocks that they like, they're all from the rural that we will expect. So from the sectors, they like the two-wheeler space, cement and staples. And the stocks that they like are M&M, Hero MotoCorp and HUL.
All right, let's move on now. Thanks for that, Jayesh. Manipal Health has made an offer to Fortis Healthcare, the country's second largest hospital chain, put out a statement today saying that the board is still evaluating Manipal Health's offer. How could the deal be structured if it were to go through? Yatin's drawn up a scenario analysis on what it could mean for Fortis Healthcare's minority shareholders. Yatin.
Well, Harsha, yesterday the Bloomberg report suggested that Manipal along with TPG would be infusing 4,000 crores capital into Fortis Healthcare, and there will be various other transactions post this fund infusion. Of course, there have been various news reports in and around Fortis, regarding the deal structure, and it's very important to see how the real scenario looks like. So we have taken two scenarios wherein TPG Capital as well as Manipal Health will be infusing capital. So the first scenario is really that it will be a plain vanilla sorts of a capital infusion by TPG and Manipal via equity. It can be in the form of preferential allotment. It can be through warrants or straight equity. Of course, if it's in that fashion, it might trigger an open offer for shareholders of Fortis Healthcare as well as Fortis Malhar, because there will be a substantial amount of management control and a substantial amount of dilution, and the regulation requires an open offer. There could be another scenario wherein there will be capital infusion, but it would be a mix of equity as well as debt. And also, the news report suggested that Manipal might propose a reverse merger with Fortis Healthcare. So if that process goes through NCLT court-driven process, there might be an exemption for open offer, which means that there could be a reverse merger as well as a fund infusion at the same time, along with the NCLT-driven process, which will give you an exemption of open offer. Now, look at the final entity. What can be the best case for shareholders of Fortis as well as Manipal? The final outcome could be that Manipal and Fortis combine themselves. The fund infusion that TPG as well as Manipal do, they will be buying back the RHT assets. So the RHT assets, Manipal and Fortis hospitals together combine one large hospital healthcare chain. Of course, there is already a pending scheme of arrangement between Fortis as well as SRL laboratories. So the diagnostics business really will stay separately and may list at a later stage. What balance remains is Fortis Malhar, which houses hospital as well as diagnostics business. So according to a scheme of arrangement which is currently on, that hospital goes into the combined entity, and the remainder diagnostics business goes into SRL. So finally we will have two entities. One will be the healthcare hospital chain along with Manipal and Fortis assets, and the second one will be the diagnostics business, which is currently known as SRL. Of course, there are various ifs and buts, but clearly what Fortis exchange announcements indicates that they have got an unsolicited, non-binding offer from Manipal, and board is yet to take a decision on the entire transaction. But the news reports are clearly suggesting that there will be a board meeting today, and once that board meeting concludes, for Manipal as well as Fortis, we'll get to know more clearly as to what the entire transaction is all about. Probably there will be various issues from SFIO to various irregularities in Fortis accounts to a lot of court dragging.
Right.
So that is something which will be the key things to watch out for.
All right, Yatin, thanks so much for that. That's Fortis. Let's move on to Bandhan Bank. Made a strong debut on the bourses today, listed at a 29% premium to the issue price. It's an issue which got strong interest as well. Shraddha Babla is here. We are analyzing Bandhan from a couple of aspects. One, just market cap. Two, how does it compare to other peer banks, and particularly IDFC Bank, which, remember, got the license at the same time as Bandhan did. Shraddha, first, the market cap analysis, which is quite interesting.
Well, yes, so post-listing Bandhan Bank's market capitalization stands at 57,000 crores, and the interesting bit is that it is valued at more than any other PSU bank in the country except for SBI. So market cap much higher than that of some of the mid-cap private banks like RBL, Federal or IDFC, also higher than those of the three listed small finance banks, and closer to the likes of Yes Bank. So that's as far as the market capitalization is concerned, let's also look at the asset and the liability base of Bandhan Bank. Both loan and deposits have nearly doubled from FY16 when it started operations as a commercial bank. So if you actually compare how its asset base compares to some of its peer group companies when we move forward, RBL Bank and IDFC's book is much larger, but of course Bandhan Bank has been able to scale up its asset and liability base much faster after converting to a bank. So you can see that the asset book size is much larger than those of some of the other small finance banks. Now, when you talk about the asset quality, again, it stands, it's much healthier with the gross NPA number standing at 1.67%, closer to what some of the mid-cap private banks are doing, much lower than IDFC Bank, which also received the universal banking license at the same time. But of course, IDFC Bank had this infrastructure legacy and DNA, also much higher than some of the microfinance institution turned banking entities. So that's as far as the NPA or asset quality is concerned. Even if you talk about CASA, Bandhan Bank has been able to scale up that liability franchise with the CASA ratio standing at 33%, much better than what even its private banking peers like RBL have done, or even IDFC Bank, for which CASA stands just at about 8.6%. Even if you look at it from the cost to income ratio parameter, again, Bandhan Bank's is one of the lowest on account of the stringent focus that the bank has had on cost control. Even HDFC Bank and the likes of Kotak would have a CASA ratio of, about 40% or so. And lastly, if you look at the return profile, also Bandhan Bank again ranks higher. ROAs of 4.5%, ROE of 28%. This is, of course, as of FY17. But even post equity dilution on account of the IPO, analysts believe that ROEs could be close to 20%. So again, higher than some of the peer banks.
So Shraddha, what do we call it? Is this a universal bank, small finance bank? Where does this fit in?
So, right now, based on the kind of valuations it is demanding, it seems to be closer to what some of the universal banks are trading at. So Bandhan Bank right now at 6.3 times its price to book, asking valuations much higher than Kotak Mahindra Bank or HDFC Bank also, which are trading based on the current market price at 5.3 and 5.6, much higher than what RBL Bank or even IDFC Bank is doing, much higher than the small finance bank. The only other banking entity which is more expensive or pricey than Bandhan Bank is AU Small Finance Bank, but again that's a function of the different portfolio that AU Small Finance Bank has.
All right, Shraddha, thanks so much. Interesting analysis there on Bandhan Bank. Of course, Ridhima Saxena of Bloomberg Quint caught up with the managing director of the bank. Let's listen into what he had to say on the day his bank listed.
First point, we like to see that where is an underbanked, unbanked people is more. If you say that eastern region, unbanked and underbanked is more compared to the south and others. So we need in the more of the bank network branch will be open in there. Second point is there, if you see that the future, the focus of the banking industry and country in the rural, because in the 34% of the bank branch as of now serving to the rural, where 70% people are living, and 66% branch are serving to the 30% people. So Bandhan is focusing to the future on that is in rural more branch. That means already we have the 55% branch in rural. So which unbanked, underbanked is more. I hope that is in next future the deposit growth and credit growth will come from there.
So which areas would you bet on?
No, if you see that the Bihar, Bengal, Assam, Odisha, Tripura, this is a very good area also. And also it is a next steps if you that the population-wise state, UP, Maharashtra, Madhya Pradesh, Gujarat, these are the highly population compared to the other small state. So we should be like to that area also grow. We are growing, but it's a need to build up more capacity of the staff in the local state, and accordingly will grow in that areas.
By when do you see you'd be comfortable in these unexplored areas, the ones that you mentioned, UP, Maharashtra?
No, if you see that the country is a big state population also huge. If you come to the 22 crores population in UP, no, it will take some time on that. But growth of the bank will be helped to reach to the more people on the basis of build up the capacity and market, of course. The market is there, so we cannot be quantify on that within 5 years we can be reach on that, no. But it is a year-on-year basis we can build up the capacity and accordingly will reach to the people on that.
So one last question. When we talk about affordable housing, you said the bank has been at least up to 88%, its book belongs to micro lending. So when we talk about some other areas within it, such as home loans or two-wheeler loans, how do you see those coming up in your loan book growth?
Now, if you see that the 1.7 million family have in our country who have not any shelter. So we'll be allowed to give the service to this segment also. Yeah, no, we say that there is a need of the credit to make a one shelter. Or if you say that there is a family, father and mother, and now son has come as an matured and married, but there is no that room for them. They can be expand their 2 rooms to 4 rooms. So this is also extension level also. So this is a way we are like to reach to the people maximum in the rural, and how we can give this support to them is an affordable housing on that.
So by how much do you see that?
This is how much is a big market also. No, if you see that the housing finance company, how they are growing on that. So need on that to build up again in the capacity on that, because this market we are new. So we have need to more time to build up the capacity of the staff, and accordingly we like to grow. So this is not in a growth mode. This is a build up the institutional capacity to reach under this level of the people, assess this type of customers' income, and accordingly we like to grow on that.
Okay, that's the management of Bandhan Bank. Let's move on now. ICICI Securities has decided to cut down its IPO size after receiving a lukewarm response from retail and high net worth individuals. The country's largest brokerage was looking to raise a little over 4,000 crore, but the primary market finally garnered bids for a little over 3,500 crores. Yatin is standing by with some details. Yatin.
Well, Harsha, it's an irony, an investment bank and a security brokerage which has helped, over 90 corporates raise 1 lakh crore in the last 5 years itself is, finding it difficult to attract investors when it comes to the IPO subscription. So yesterday, the ICICI Securities IPO concluded. It was an offer for sale from ICICI Bank. And if you look at the subscription from the retail side, the HNI quota as well as the shares reserved for the ICICI Bank shareholders, the response was really lukewarm given the weak market conditions, and more importantly the higher valuations the company asked for. Now basically if you look at ICICI Securities from a brokerage and a financial services provider, various entities like Motilal Oswal, Geojit Financial, JM Financial, Edelweiss, the listed peer set it has, and have been trading at a price to earning multiple of less than 30 times, and ICICI Securities was asking for a multiple of over 35 times when it comes to the issue, pricing. Now, since it was an offer for sale and the regulation helps them, retain the subscriptions on a lower side, the issue size has been cut from, little over 4,000 crores to 3,500 crores. So 500 crores was the issue size which was cut, largely to do with the fact that the market conditions were weak, and more importantly the ask valuation was quite high. Of course, the QIB response and the QIP book got subscription for nearly 1 time, and the anchor book got a subscription of close to 1,717 crores. So it was really the QIPs which bailed out the entire IPO, and the response from other categories were quite weak.
All right, Yatin, thanks so much for that. Moving away from business into politics, the Election Commission today announced the dates for the upcoming assembly elections in Karnataka, setting the stage for a direct electoral contest between the BJP and the Congress. Polling will take place across the 224 constituencies on the 12th of May, and the results will be declared on the 15th. Let's hear out what the Chief Election Commissioner had to say on the elections.
Almost all the parties were of the view that it should be a single-phase election, and therefore, keeping in view their demand, it is single-phase election with notification on 17th April 2018. Last date of nominations, 24th April 2018. Date of scrutiny of nominations 25th April 2018. Last date for withdrawal of candidatures is 27th April 2018. Now your issue comes. Date of poll is 12th May. Yeah. Date of counting is 15th May.
Okay, those are Karnataka elections. Meanwhile, the US, European Union, Ukraine and Canada have expelled more than 100 Russian envoys in response to the nerve agent attack on a former Russian spy in Britain. The US, in its strongest action against Russia under Trump, is set to account for at least 60 of those. Russia, on its part, has vowed to retaliate. How would this affect the dynamics between the former Cold War rivals? Kevin Chirilli of Bloomberg News reports.
In addition to expelling those 60 what the U.S. would consider spies, they are also shutting down a consulate in Seattle. This coupled with what happened in the last month of former President Barack Obama's administration, where they shut down a mansion, a Russia mansion in Maryland, as well as an entity in New York. So this is a continuation of that U.S. policy, and this is the most aggressive stance that we've seen taken. Now, senior administration officials telling Bloomberg News that in addition to that, the president ultimately reached that decision after his phone call with Vladimir Putin last week. They did not discuss this on that phone call. We should also note that the president did consult with NATO allies. This is part of a much broader effort on behalf of this administration, and comes at a time in which the intensity surrounding his relationship with Russia is under the microscope, to say the least.
Right. North Korean leader Kim Jong-un may be on a surprise visit to China. At least that's what sources have told Bloomberg News. This would be Kim's first known trip outside North Korea after taking charge in 2011. Bloomberg's Stephen Engel reports.
Yeah, I think there were probably some people in Beijing knew he was coming, because he did have to take that train, which is quite a unique train, very similar to the one that his father used when he made trips to Beijing. He had to cross the border there at Dandong from North Korea into northeast China and then on to Beijing, where they park it at the Beijing railway station. So it's kind of conspicuous. You can kind of tell a high-level official from North Korea is coming. What we don't know for sure if it is, in fact, Kim Jong-un, but 3 people close to the situation can confirm that the North Korean leader is in Beijing. Why would he go there now? Well, of course, ahead of the potential or the possible summit, if you want to call it that, with President Trump at a location yet to be determined. The Chinese obviously don't want to be left out of the consultation phase of this, and also they want to kind of gauge from Kim Jong-un what his strategy is in going to talks with Trump and what he wants from the United States, whether he is sincere in his pledge, of course, to that he's willing to abandon his nuclear weapons program. But it is an interesting new twist in what is becoming a very interesting saga, with the potential meeting as well between Moon Jae-in, the South Korean president, and Kim Jong-un coming up slated for early April.
Stephen Engel reporting from Tokyo. Out of time on the show. Thank you so much for joining us today.
Countdown is up next.